Good evening, everyone. Thanks again. So my name is Masaki Taketsume, fund manager of the Schroder Japan Trust. So for the next 20 minutes, I'd like to briefly touch upon three topics: key features of the fund, performance and the portfolio positioning, then last but not least, market outlook. But before getting into the detail of the presentation, I'd like to start with the key message from my presentation. So basically, we believe Japanese equity market now has two strong long-term driver, long-term tailwind. One is inflation, and the second one is corporate governance improvement. And our fund, Schroder Japan Trust, is positioned quite well to get benefit from those two strong tailwind, inflation and the corporate governance improvement. So let me start with the key feature of the fund. So our investment approach is bottom-up stock picking, driven by the in-house fundamental research. And we have a long-term investment horizon, holding around 60 to 70 stock with a low turnover. And as a result of the bottom-up stock selection, portfolio typically has a style bias towards value and the contrarian. And we typically overweight in mid to small cap space because there is a more market inefficiency. We can take benefit by utilizing our in-house research. And the gearing, we typically manage the gearing in a range of the 10 to 17.5%. So when we talk about I know that every active fund manager calls themselves as a bottom-up stock picker. So what do we mean by bottom-up stock picker by ourselves? So we tend to see the four categories of the opportunity set from the bottom-up stock selection. But the first two categories are the most important driver for the alpha generation of the fund. First category set, we called it as a market misperception. So basically, we are looking for the company with improving growth prospects through the management effort, and which are underestimated by the other investor. So we are basically looking for the company with internal changes. And the corporate governance improvement happening in Japan provides a strong tailwind for us to find the market misperception type of stock. Second category, we call it as a market oversight. We are looking for the company with undervaluation, especially among the small and the mid-cap space, with a strong and a defendable business franchise in a niche product area. So in an inflationary environment in Japan, those strong franchise give the company to realize a strong pricing leverage to show the strong earnings growth. So those two categories, market misperception and the market oversight, are the kind of the stock we are looking for through our bottom-up stock selection. And that's the kind of the stock which is going to benefit from the tailwind in the Japanese equity market. Corporate governance improvement and the coming back of the inflation. So that's the key feature of the fund. In terms of the performance and the portfolio strategy, so we have a pretty strong performance for both short-term and long-term. So we outperform the benchmark for 3 months, year-to-date, 1 year, and 3 years. And the key component of the performance are alpha generation from the stock selection and the style, a value bias style, and obviously gearing. So for the both short-term and long-term, all of those components, stock selection, style, gearing, worked as a tailwind for our outperformance. So this is a discrete year's performance, which has been quite strong as well. And this is a long-term performance. So this is a stock contributor for our fund performance over the last 12 months. So in addition to the typical value stock in a Japanese equity market, like Sumitomo Mitsui Financial, it's a bank sector. So you can also find an unfamiliar name like Infronia Holding. So this is a mid-sized construction company which has a strong margin improvement by their own effort. So even from the stock level, value stock, value style contributing the performance. In addition, some of the company-specific driver, Infronia Holding, contributes the overall performance. So it's again, stock selection, style, and the gearing all contribute positively for the outperformance for the fund. So in terms of portfolio positioning, how we are positioning the portfolio right now. So in terms of style-wise, we maintain the bias towards the value. So this chart shows that the relative variation of the value stock against the growth stock over the long period of time. So recently, for the last 3 years, value stock has been regaining the ground against the growth stock. But from the long-term viewpoint, so growth value stock has been devaluated against the growth stock from 2013 to 2020. So even after the last 3 years of outperformance, it still recovered just half of the lost ground during the 2013-2020. So from the value biased investor like us, it's more like a glass half full. Yeah. And secondly, we maintain the bias towards the domestic-oriented mid to small cap name, especially those companies benefiting from the solid volume recovery with a strong pricing power. Because now we believe that inflation is coming back in Japan. So under that environment, if you have a strong franchise in your business, you have much stronger pricing power to drive the earnings growth. So that's the kind of stock we are overweight in. And the last but not least, we maintain the bias towards the value stock with a company-specific catalyst led by the corporate governance improvement. So basically, we are maintain the overweight in those stocks with the internal changes. So next couple chart is some brief positioning of our overall portfolio. So I'm going to skip that. Then last topic, macro outlook. Again, we have a long-term positive view on the Japanese equity market because now we have a two strong tailwind for the Japanese equity market. One is inflation, and the second one is corporate governance. In terms of inflation, obviously in the short term, inflation is a good thing for the Japanese corporate because now they can increase the price so that they can realize the pricing leverage to improve the earnings growth. But in addition to that, if inflation stay here for longer in Japan, that has a pretty positive long-term implication for the Japanese economy. Because, inflation, in other words, means that the increasing cost of the holding cash. So in that sense, from the household viewpoint, household may shift from their cash from the deposit to the investment, including the Japanese equity. From the corporate side, seeing the inflation, increasing cost of the holding cash, they may shift the cash on the balance sheet to the productivity investment. So if inflation stay here for longer, Japanese economy may shift to the investment-driven economic growth for the long term. So that's a quite positive change in the Japanese economy. And in terms of corporate governance, partly thanks to the corporate governance, corporate earnings are solid and the valuation still reasonable. And the Japanese corporate management is clearly changed the mindset towards the investor-oriented, so improving the shareholder remuneration, etc. But the story doesn't stop here. So we still think there is a significant room for improvement in the corporate earnings and the profitability through corporate governance improvement. So let me talk about these two topics in more detail. So these two charts show that the inflation expectation. Left one is the consumer, and the right-hand side is the enterprise, corporation. As you can see, inflation expectation by consumer and the corporate has been gradually creeping up. So that means that both consumer and the corporate feel that the increasing cost of holding cash because of the inflation. So what does it mean for the ordinary household? On the left-hand side, this is a breakdown of the financial asset held by the household. Top chart is Japan. As you can see, still Japanese household holds 54% of their financial asset in a bank deposit, which give you the yield of the 0.001% or something like that. So in a deflationary environment, it makes sense, because if you keep holding the cash longer, you can buy the service and the product cheaper. It's under the deflationary environment. But under the inflationary environment, it's no longer the case. You need to do something to deal with this cash. And the one way is just reallocate that cash to the equity or mutual fund. So now it's just 15% of the household asset is allocated in either equity or mutual fund. So I don't say it's going to come up to the level of the United States, but historically speaking, I think it's 1993 or 1994, 30% of the financial asset was in the Japanese household were allocated towards either equity or mutual fund. So under the inflationary environment, there is a chance to see that the shift from the deposit to the investment. And there is a catalyst for that type of change on the left-hand side. So Japan has a Japanese version of the ISA. It's a Nippon ISA, so-called NISA. And then from next year, we are having the new version of the NISA, which has a much larger and longer tax break. So that may be the catalyst for consumer to reallocate the cash out of the 0.001% of the deposit to the either equity or mutual fund. So that's a long-term positive thing happening in consumer. From the corporate side, so Japanese corporates still has a lot of cash on the balance sheet. So when they see the inflation or increase in the whole cost of the holding cash, they're going to do one way is that just return the cash to the shareholder, improving shareholder remuneration. Another one is making an investment for the productivity improvement, because as you know, Japan has a long-term challenge for the shrinking population. So in order to overcome that challenge, there's a good rationale for corporation to making an investment for productivity improvement. It's an investment for the IT. So this is a capex growth chart for the Japanese corporation as a whole, and the green bar is an investment in IT. So as you can see, we already see that the Japanese corporation has been increasing their investment in IT, and the inflation may accelerate that trend. So again, in terms of the implication for the inflation, it's not just to have a positive impact on the short term, but also have a positive implication in the long term, because that may encourage the Japanese economy, consumer and the corporate to shift towards the investment. So Japan may enter into the investment-driven economic growth. But in terms from our fund viewpoint, okay, inflation is a good thing, but not every company can benefit from the inflation. For example, ham and sausage company, they can't raise the price because if they raise the price, consumer can easily switch to the other brand or private brand because they don't have any strong brand or franchise value. But in some company, so this is a stock in our portfolio called Kyoritsu Maintenance. So they are hotel operator under the brand name of the Domi Inn. And they have a pretty strong brand value. So as a result, on the left-hand side, green bar is the room rate of their hotel. So it's a pricing. And the blue line is the utilization rate. So as you can see, they already realize the pricing above the pre-COVID level. So under the inflationary environment, so they can already realize a much higher pricing compared to 2018 or 2019 because they have a strong brand power and maintain the high level of the utilization rate. So this is a kind of a stock which gonna benefit from the inflationary environment in Japan. So that kind of stock we are looking for, especially in the mid to small cap space, because we are looking for the so-called market oversight type of a company. I mean, mid to small cap with a strong franchise, with a strong pricing power. So in terms of the moving to the next topics, corporate governance. Okay, corporate governance improvement already realized some benefit. So compared to the 10 years ago, ROE of the average Japanese company almost double, from 4% to almost 8%. But valuation, price to book ratio, it's a function of the ROE, has been revaluated, but just 20%, from 1.06 times to 1 to 2 times. So corporate governance has been already delivered some result, but the valuation, market valuation, has not yet fully reflected that benefit. And the story doesn't stop here. So still, this is a percentage of the net cash company, net cash on the balance sheet in excluding financial. So in Japan, still 50% of the company holds the net cash on the balance sheet compared to the 20-something in the US and Europe. So there are lots of the powder to improve the shareholder remuneration or return on equity. So there is a powder, dry powder there, and there is a reason to use that powder. So still, half of the Japanese company traded below their book value. And as you may know, Tokyo Stock Exchange recently announced a pressure to improve the overall valuation of the listed company. So there is a dry powder on their balance sheet. There is a good reason for those companies with a low valuation segment to improve the return on equity by improving the efficiency of the balance sheet. And clearly that is already shown the progress of the shareholder remuneration. So share buyback is already in a pace close to the historical high level, which was last year. So corporate governance did improve the return and the valuation of the Japanese equity market, but still there are lots of the room to improve, and lots of the Japanese corporation has a dry powder to improve that thing. So one of the company in our portfolio, so-called Mitsui Chemical, it's a chemical company. So they have been basically shrinking their commodity business and growing the specialty chemical business. So that's gonna structurally improving their return prospect. But for example, in terms of this stock, they are still being traded like a 0.7 time price to book, single-digit PER. So there are lots of the company like that, which gonna change from the corporate governance improvement. So that's something we are looking at through the bottom-up approach. So in summary, so let me finish my presentation to rephrase my key message. So Japanese equity market now has a strong two tailwinds, inflation and the corporate governance improvement. And with our approach, our fund is positioned quite well to get benefit from those strong two tailwinds. Yeah, thank you for that. Yeah.
Thank you very much. Okay, thank you. So as before, if you have a question, please raise your hand and wait for the microphone. Anybody want to go first? I will happily. Can we talk about interest rates and the interest rate outlook in Japan and how that might impact inflation?
Yeah. So in terms of interest rate or monetary policy in Japan, so we should strictly see differently was the normalization of the monetary policy and the tightening of the monetary policy. At this moment, we believe that the Bank of Japan is on a step to normalize the monetary policy. So, as you may know, Bank of Japan is taking a quite unusual or untraditional monetary policy, one of which is a negative interest rate policy, and another one is the so-called yield curve control, trying to control the overall shape of the yield curve. But that's aiming to improve the inflation outlook in Japan. So in other words, if inflation stays within an acceptable range for the Bank of Japan, which is roughly 2%, and it is now around that case, Bank of Japan is happy to normalize the monetary policy. So basically give up the yield curve control and increase the rate from negative to probably 0%. So as long as that's a normalization, I don't think it's going to have a huge impact in either bond market or equity market. So only risk that's if inflation got out of control, that's a clear risk for the huge increase in interest rate. But at this moment, we think the risk is relatively low. Yeah.
Sorry, a question here first, thanks.
Yeah, sure. When an investment doesn't work out according to your strategy, could you explain how you manage the exit? As you know, it's easy to make an investment, but very difficult sometimes to exit.
Yeah, that's right. Yeah. So generally speaking, when we approach any stock as an investment idea, so we have a three component. So investment thesis, basically reason to own the stock, and some quantitative measure like earnings forecast and target price. And the last but the most important component is a KPI. So we basically set the KPI to track the progress of the investment rationale. So for example, in the case of the Kyoris maintenance, just we talk about it. So we set the KPI for the room rate and occupancy rate. So if we something warning sign alarming about the slowdown in the room rate increase or slowdown in occupancy rate improvement, we're going to come back to check our investment rationale. So if we understand that our investment rationale being challenged, so there is no longer the good reason to own the stock, we exit from we sold that position. So that's our basic stance of the investment. So in order to that, so we are try not to fall in love in any kind of stock in our portfolio.
Question here, thank you.
Japan, in which I regret to say I've been overweight for some time, has always offered more promise than delivery, and where India might have bought me a Bentley, Japan's got me a bus pass. And there's an aspect of looking at the companies that I monitor that I should be interested in your comment on, that if we look at the period from April 2020 through to, roughly speaking, October, it's notable that there was a division of opinion within investment trusts and unit trust investors, in that two companies in particular had a substantial increase, which has subsequently come back. I wonder if you could comment on what it was that caused JP Morgan Japan and Fidelity Japan to substantially outperform you for a period of time, but clearly not get out at the right time and fall back again. And how, if that happened again, you would catch the tide and get your boat back into safe harbour before it all went wrong again. It's just a fascinating, to me, slide. The other thing is, I looked at Schroder Tokyo as well, and there's a commonality of performance between your fund and Schroder Tokyo. Do you have a great overlap of management or research that would drive that, or is that pure chance?
Okay.
That's two questions, really.
Yeah.
Thank you very much for that.
Thank you. So I want to take second question first. So basically, I'm a fund manager for both Schroder Japan Trust and the Tokyo Fund. So basically, that answer to your question. So both of two things. Yeah, right. So that's the reason why I take the second question first. And in terms of your first question, so I'm not in a position to talk about what's going on in our competitor, like JP Morgan and Fidelity, but probably, yeah, they are more growth-oriented. Yeah, so that's why. So they have a pretty strong year for up until the 2020 or something like that. Then they might have suffered. So yeah, and we have a little bit more value bias approach. So which had a little bit tough time during the 2016 or 2020. But now, yeah, we have some tailwind in terms of our style-wise, but more so than. But in addition, or more importantly, because what's happening inside Japan, there is a change inside Japan, right? So inflation is coming back, corporate governance is improving, so that provides a more opportunity for us, like a bottom-up stock picker, to identify the beneficiary for the changes inside Japan. So that gives us some more investment opportunity. So I'm not sure I answered your question correctly, but thank you.
Taki, I had a question, please. You talked about corporate governance. How active are you with management when you, with the companies that you invest in, to encourage them to take positive steps, either with buybacks or investing the capital they have?
Yeah, so as an investor, we are also making some sort of a soft engagement effort. So we don't do the shareholder proposal or proxy vote or something, proxy fighting or something like that, but we frequently have a meeting with the company management for the stock in our portfolio to talk about specifically about the governance topic. So what's our request to utilize a balance sheet or shareholder remuneration policy? And the interesting thing that I'm doing this one for 20, 30 years. So 20, 30 years ago, we don't have such type of a meeting to talk about the governance or shareholder remuneration policy. We are always talking about the earnings strategy. But for the last 5 or 10 years, so in addition to the usual IR meeting, talk about the earnings and the strategy, we frequently have a meeting with the management to specifically talk about the governance. And the Japanese company management is quite open and happy to talk about those topics with an investor like us. Yeah.
There's been a cultural change in that time?
Yes, I think so. Yeah, so it's not just a 1 or 2 years phenomenon. So probably corporate governance improvement in Japan probably officially got started since 2015 first introduction of the corporate governance code in Japan. So we already have a 8 years history of the corporate governance improvement. So it's structurally in place in the Japanese equity market.
I think, any other questions in the room? Got time for one more? Otherwise, I've got a quickie. Chap here, please. Just wait for the microphone, please, before you... Sorry, just wait for the microphone, please.
Hi. Michael Adams. As you are the fund manager for Schroder Tokyo as well, can you tell me that what is your policy in relation to investment? You stated for the Japan fund, you are going for mid to small cap. What do you do with the Tokyo fund?
Right. So let me answer in this way about talking about the difference between the Schroder Japan Trust and the Tokyo fund. So from the portfolio viewpoint, commonality between the Schroder Japan Trust and Tokyo fund is quite high. So roughly maybe over 90%. But compared to the open-ended fund, Tokyo fund, because of the investment trust structure, Schroder Japan Trust has more flexibility to have an exposure to the mid to small cap illiquid name. And also, so that's one difference. And another difference is obviously gearing. So investment trust using a gearing, and the open-ended fund does not. So that's the two major difference between the Tokyo fund and the Schroder Japan Trust. I hope that answers the question. Yeah.